Welcome to RenovatED with Jennifer the RENO-GAL Goldsby, your go-to podcast for everything renovation related. Let's get renovated. You will often hear me argue about the benefits of renovation financing. You know I'm a champion of this segment of the mortgage industry, but there is a situation, a circumstance in which they fall a little flat. I wish they could be of more use, and we could really use to do some more work in this particular area. And that's in the instance of a natural disaster. So let's say you're a homeowner and you've got a property and it's been damaged by some sort of a natural disaster, a flood, a hurricane, a tornado, an earthquake, fire, whatever it is. Your home has been either completely destroyed or partially damaged by some sort of natural disaster, and you've got insurance, and depending on the natural disaster, you may or may not have coverage, right, for that particular event. But let's say you have some coverage and insurance funds are made available to you. They may or may not be enough to get the job done. And so we've had throughout the years some individuals come to us looking for some help. And one of the things I want to say is that with renovation financing and insurance claims, those two sources of funds, they cannot be commingled. So you get a check from the insurance company, you're sitting on a wad of cash, you need to fix, repair your home, but it's not quite enough. Or maybe sometimes what we see is that individuals would like to take the opportunity, since they have to rebuild, to maybe do some updates they hadn't done and had planned on doing, or possibly even expanding the footprint of the home. We've seen some of that too. So insurance funds aren't enough to repair all of the damage, or homeowners want to add a little bit of work to the project since they're going to undertake such a huge project anyway. Unfortunately, the renovation escrow account, the funds in that account, cannot be commingled with the insurance funds, which presents a bit of a problem. If you could just throw it all into a pile and pull out of that pile what you need, you'd be doing great, right? But we can't do that. They're handled separately and they cannot be commingled. Instead, what I might suggest, if it's possible, and it's not always possible in every situation, but if it's possible, you've got enough equity to finance the entire amount of the renovation project. Everything you need, finance it into your new renovation loan. And then you can always use the insurance funds to do a principal reduction, or maybe if you had an existing mortgage, you can, pay down that existing mortgage with those funds. Some folks have even been able to pay off their mortgage altogether and just start fresh with a new loan. Try to do that if you can. And if that's not possible, if there's not enough equity in the property to be able to do that, to roll everything all into your new renovation loan, then I might recommend that you get the work started and get as far as you can with the insurance funds till you run out of money. Now, this one gets a little tricky, right? And there's some risk involved there, but it's an option. You get started, you get as far as you can working off the insurance funds. And here's the kicker. You have to halt the work, which is going to happen anyway at some point because you're going to run out of money, right? But some contractors may be willing to continue work knowing that they're going to get their funding from another source. Just remember, when you go this route, the work has to cease for a period of time until your loan closes. And then after your renovation loan has closed, you can pick up the renovations and begin the project again. Now, the legalese required to appease attorneys, compliance officers, and regulators. This podcast is hosted by Jennifer Goldsby, NMLS 591226 VP Renovation Lending. The topics discussed herein reflect my personal opinion. They do not represent the opinions of Diamond Residential Mortgage Corporation and its management. Discussions about loan programs in this podcast are not a commitment to make a loan. Programs, approvals, rates, fees, and loan terms are subject to loan applications, credit risk, appraisal, evaluation, underwriting guidelines, and other lending or qualification criteria and limitations, and are subject to change without notice. Not all products are available in all states. Not all borrowers will qualify. Diamond Residential Mortgage Corporation, 582 Oakwood Avenue, Lake Forest, Illinois, 60045, 847-244-9301, NMLS 186805. For licensing information, go to nmlsconsumeraccess.org/entity details.aspx/company/186805. Equal housing opportunity. Diamond Residential Mortgage Corporation is not affiliated with or acting on behalf of or at the direction of FHA, VA, USDA, Fannie Mae, Freddie Mac, or any governmental body or agency.